In this video, we're going to talk about key levels you must be watching in Forex. Stay tuned. Hey traders, a very warm welcome to you. Okay, so you're in front of the screen and you've got so many markets you're watching, or maybe you've got kind of a handful of markets. Never advise watching too many, but let's say you've got 4 or 5 markets. You've got currency pairs, USD, JPY, you've got cable, you've got euro, maybe you've got Swissy on there, Loonie, whatever it may be. You kind of look at your chart and it's just full of lines, it's just clouding you, and you've got 5 of those and it's just too much information. So how do you strip it down and only watch the most important levels? What are the most important levels you need to be watching when you're trading currencies? Okay, so the first one is today's high and low. Obvious, but so true. You need to be aware where today's high is, where today's low is, because price will respond to those levels. Price, when it approaches the high, is obviously either going to keep going through if we're in a trend environment, or it's going to maybe fake out and come back lower, or it's going to fail just below. You're going to get a double top kind of thing. Either way, it presents an opportunity, so you need to be aware where they are. Now, often you can get kind of narrow-minded in tunnel vision. You're on a 1-minute chart or a small chart if you're day trading, and it kind of, the scale ends up adjusting and you forget where the high or low is. So just remember to kind of keep your scale, bring it down, or have a higher time frame chart like a 5 or 15, an hourly, whatever, to keep this stuff in perspective, so you don't kind of get just caught up in the small candles and then lose sight of, hey, actually we're near the high, and end up getting caught out going long in a quiet environment near the high. Hold my hand up, I've done that before. I've been kind of so focused on it and just not realize where we're on the bigger picture. So just be aware of that. Yesterday's high low, very important as well. You want to see if are we going to have an inside day? Are we going to have an outside day, which is both broken? Are they going to be a stumbling block for us, or are we going to use those as support? Again, these are levels that that other traders are watching. They're watching today's high, yesterday's high, on the low, because everyone has the same figure. So everyone is watching that level. It's not subjective, nothing subjective about it. It's there, it's in print. Whether you're charting, whether you're tape reading, whether you're just kind of looking at the price coming through, everyone's got the same number. So it pays to be watching. And this is where the trade opportunities occur, at these levels. And also where people place stops. If people are going short, a lot of people will be placing a stop above the high or the prior day's high. These are common strategies. So you can either take advantage of that or be aware there could be a liquidity flush going into that, or there could be, a cascade of orders coming in. Just being kind of the sensible trader and thinking 3 or 4 steps ahead and having these simple levels on there. Okay, the next one is a weekly high or low. Again, a lot of people are watching these highs and lows of the week. And it just becomes an important kind of benchmark to see where we are and to kind of maybe filter your trades. If we're at the weekly high, or we're kind of in the top 10% of the weekly range, again, you could look at this as a range as opposed to just linear levels, and say, and then kind of formulate a trade from that. So if the weekly range is there and you're in the top 10% constantly on the day, maybe you're thinking, well, this is accepted now. We are just priming ourselves for a break through the high. I'm going to now position and get ready for the first kind of dip and then impulse, or something like that. Whereas if you weren't aware of the weekly high or low, it might just look like it's stalling to you. So again, keeping these things in perspective, and especially these are kind of the main ones: the current day, the previous day, and the weekly. I want to keep an eye on, guys, for currencies especially, is the gap. If there's been a gap on the Sunday night open, just watch where that is. Where is it in relation to where we are at the moment? Is it a big gap? Is it kind of news has come out? Is it just a nothing gap? What was the last week's close, if you like, and this week's open? And just kind of seeing how price responds to that. It might not be as useful, but if you're aware of it, as you draw a faint line on your chart, nothing too big, just kind of separate your important levels to your maybe important levels. If price is responding to it and struggling at it, maybe it becomes a bit more of a key level. If price is just flicking through it as if it's not there, then you can take lead from that and say, you know what, it's not worth watching. So it's worth keeping an eye on, but be prepared just to discard it if it's not really that relevant. All right, so we've got now support and resistance, which are a bit subjective. These are all actually, defined. Everyone's got the same kind of thing. So this is sort of some subjective support and resistance. So clusters of trade. One of my clusters of trade is not necessarily a key, an actual level. So not necessarily kind of a defined point where we've struggled, like this double top example here. That would be a defined kind of significant support or resistance level, should I say. A cluster of trade is really where, you know, you've got a lot of trade in one area, a big block, and then it maybe moves away and does something else. And this becomes kind of a zone, if you like. And if you're using volume analysis, that will come up. But if you're not, you just kind of want to just see areas where people are interested and have done and transacted a lot of business together, then they are worth noting on. And again, possibly use different line colors, different dots or dashes, depending on, you know, how important you think it is. That's a very easy visual way of seeing. So you're glancing over, you say, well, actually we're hitting a really key level now, or we're hitting a minor level. I'm in the trade, I'm not worried about it. You can very quickly see it. So maybe set your own key, if you like, for those kind of things. So yeah, clusters of trade, very important. They're not as defined as support and resistance, but it's still where a lot of people have transacted and a lot of people have agreed on a price level, and you might get a high volume kind of node there, or you might not, but it's still worth noting on the chart. All right, next one is significant support and resistance. I'm sure you're probably very familiar with that. It's just anywhere where price has stalled several times. Theoretically, you could say a high is resistance, but I would rather put it in this category as it's just a high. It hasn't really proved itself as proper resistance yet. Or could you know, you can get both, but a high is just a high. A resistance level is somewhere it's banged its head, price has banged its head several times. Maybe you have to go back several weeks for that. Maybe you have to go back several days. Maybe you only have to go back a few hours. But it's some level that has struggled to get through, whether that's a seller been sitting there or buyers are backed off. You know, we don't know. But the point is, it's worth having these levels on because people are going to have stops up above them. People are going to take breakout trades above them. It's going to be kind of change the sentiment of the currency pair, that kind of stuff. So being aware of your resistance levels above and your support levels below. And just a word of caution, guys, don't overdo it. Don't kind of put loads of stuff on there, because too many lines, what you do is end up ignoring them. I've made this mistake myself. You put loads of lines on, you do every little support and resistance level, and your chart just looks like it's ridiculous. You need to just kind of say to yourself, even restrict yourself to a few and say, listen, I'm not going to draw more than 3 lines on this, because otherwise I'm just constantly looking at things when I don't need to be. Where are the very, very premium areas I want to do business? That's what you should be asking yourself. And the final thing is the whole numbers. So people are obviously watching whole numbers in stocks as they are with Forex. You know, it's come up to a key whole number that is very important. The media has been going on about it, or just an obvious whole number that means something to them. Things are going to happen more often at whole numbers than at normal numbers. Why is that? It's because you've got companies who perhaps are saying, hey, we want to hedge our exposure when we get above this level, and they're board of directors and they're just picking out a number, a whole number. Or it might be, you know, everyone kind of, just humans use these whole numbers unless they come up to a calculation, you know, for a finite number based on another calculation. Most people are going to say, okay, well, yeah, let's buy over $100, or let's look to sell our position under $100, or 1.2 if you're talking about some sort of currency pair. So just being aware of the whole numbers and how price could potentially respond to them, whether in your position already, you might want to scale out of it, or maybe you want to see how it responds to it. But these are the kind of things worth having. So anyway, guys, that's a selection of the key levels that you've got to be watching in Forex. If you enjoyed the video, thumbs up, take care, see you in the next one, keep the risk managed, goodbye.